Hi, my name is Justin Lin, investment strategist at GlobalX ETFs, and welcome to Express Lane. So, last week, 70% of the S&P 500 have reported earnings, and roughly 80% of those earnings are above investor expectations. However, the Strait of Hormuz does remain blocked, and that means crude oil prices are higher, interest rates are higher, leaving pockets of the market at risk. The green lights of this week. AI infrastructure names are likely to see their momentum continue as big tech have delivered on their earnings expectations, and guidance for infrastructure and data center development remains very much robust. Investors will be incentivized to look through the macro noise as long as these guidance and earnings momentums continue to be strong. For the yellow lights of this week, crude oil prices are likely to be volatile as discussions between US and Iran remains very much in flux. However, with the comments between US and Iran becoming increasingly conciliatory rather than escalatory over the past few weeks, the risks are more to the downside than to the upside. Finally, for the red lights of this week, Australian investors could consider currency hedging their international exposures as the RBA remains one of the most hawkish central banks across all developed economies. Despite a weaker than expected CPI print last week of 4.6% versus 4.8% expected, the RBA is still expected to rate hike up to 3 times in 2026. That could see the Australian dollar strengthen quite materially over its international peers. Thank you for joining us in the GlobalX Express Lane. If you have any questions or comments, please leave them down below, and I look forward to seeing you next week.